Welcome to today's explainer. If you've ever felt like managing your money is basically a giant complex puzzle where half the pieces are just missing, well, you're absolutely in the right place. Today, we're completely demystifying wealth management. We're going to break down a really practical, incredibly powerful tool, the 4-step financial framework. So let's just dive right in. Let's kick things off with a bit of a reality check. Are unexpected expenses constantly derailing your future? Honestly, it's a very real anxiety. We all face those out-of-the-blue life transitions, right? A sudden, massive car repair, a shift in our careers, or just the creeping, relentless cost of living. Trying to actually plan for your future while you're constantly putting out financial fires today, it can feel incredibly overwhelming. But to solve that, we're using a fantastic roadmap today based on Cantor Fitzgerald's Strategic Financial Advice Framework. We'll look at the financial planning puzzle, walk through the 4 core steps: needs and objectives, strategy, actionable decisions, and implementation, and finally cover your very next financial step.
First up, the financial planning puzzle, navigating complexity.
Get this. According to One Wildlife Advisors, a staggering 55% of Americans literally cannot cover a $1,000 emergency. 55%? Just to put that into perspective, for the majority of people out there, a single flat tire immediately becomes a full-blown crisis that pushes them right into debt. That is exactly why we need a structured framework. We need a safety net.
Which brings us to Step 1, needs and objectives.
Needs and objectives. This is the absolute foundation of our entire framework. Before we start picking fancy investments or buying insurance policies, we have to know what we're actually building towards, right? Let's take a look at a real-world example from Cantor Fitzgerald to show you what I mean. Look at the sheer scale of the wealth here. We've got John and Mary, a couple in their late 40s, pulling in 220,000 euros annually. They've got a net worth of 2.7 million euros. But, and this is a big but, despite all this apparent wealth, their needs and objectives analysis uncovered some frankly terrifying gaps. They had zero emergency fund and were dangerously underinsured. It just goes to show, a high net worth absolutely does not automatically equal financial security. And of course, your needs change drastically depending on what season of life you're in. Take Cal and Haley, a case study from Coastal Capital Advisors. Now, unlike John and Mary, who are totally focused on legacy, Cal and Haley are right in the messy middle of life. Cal just took a startup job with variable pay, and Haley headed back to nursing school. So their objective wasn't estate planning at all. It was simply building a cash flow buffer to survive any income drops without completely stressing out. Moving right along to Step 2, agreeing on strategy. Strategy often just comes down to changing your daily behavior. Look at Darren and Emily, a couple working in the helping professions. Their old strategy? Throwing emergencies, like car repairs, straight onto a credit card with a massive 24% interest rate. Yikes! Plus, they were relying on super expensive last-minute takeout because they were just too exhausted to cook. So their new strategy? They subscribed to a meal delivery service 3 days a week to cut down food costs and actually free up some time. Then, they set up automated transfers to a savings account every single payday. They literally re-strategized their everyday habits to free up cash flow. Talk about a game changer. Strategy is also how you handle the really complex assets. Let's jump back to Cal at the tech startup. He received a pretty generous stock option package. But to avoid massive, completely unexpected tax bills, his advisors created a really clever strategy. He'd only exercise his options up to the AMT crossover point each year. If you're wondering what that is, it's basically the specific threshold where exercising stocks suddenly triggers the alternative minimum tax. By strategically planning around this exact point, Cal gets all the benefits of his stock without being totally blindsided by the IRS. So wrapping up this second step, the core strategies our case studies utilized included things like building those emergency cash buffers, diversifying highly concentrated company stock over time, maximizing tax-efficient pensions, and properly structuring their legacy. Ultimately, it's about building a bridge between where you are today and where you want to be tomorrow.
Okay, now for Step 3, actionable decisions.
Let's look at the exact decisions John and Mary made. Remember their 2.7 million euro net worth but total lack of liquid cash? To fix this, they made 3 massive decisions. First off, they established a 50,000 euro emergency fund immediately, just for pure peace of mind. Second, they modeled a 700,000 euro lump sum pension contribution for John to supercharge his retirement in a highly tax-efficient way. And third, to pass wealth down to their kids, they set up bare trusts. These are just simple legal vehicles that let them transfer 6,000 euros per year to each child without hitting those pesky lifetime tax thresholds. Boom, boom, boom. Real, actionable decisions.
Here is another, frankly brilliant, actionable decision, this time from Adele. David and Maria are British citizens, but their 8-year-old daughter Isabella is a U.S. dual citizen. Now, cross-border investing for kids, it is notoriously complex, like a real headache. So, what was the decision? They opened a UK SIP, that's a self-invested personal pension for little Isabella. They contribute £2,880 annually, which automatically gets a tax top-up. And because the funds are locked in until she turns 57, it creates this incredible 49-year runway of compound growth. It neatly navigates all those messy US and UK tax complications in one fell swoop.
And you know, sometimes actionable decisions are just about sidestepping completely bureaucratic nightmares. For example, a UK beneficiary inheriting a US asset was told they needed this thing called a medallion guarantee stamp. It's a highly specialized US financial certification that is incredibly rare and super expensive to get in the UK. So what was the actionable decision from their advisor? Just ask the US institution if they'd accept a standard local notary instead. And guess what? They did. A few quick phone calls, a regular local notary, and a ridiculously complex hurdle was entirely bypassed.
Which leads us to our final phase, Step 4, Implementation and Review.
John and Mary noted how totally overwhelmed they felt before implementation, worrying they just didn't know how to plan for retirement, schooling, and the unexpected all at the exact same time. But actually executing a plan, it completely replaces that heavy anxiety with this sense of profound relief.
Implementation and review, well, they're really all about systems. It means setting up those automated savings transfers every single payday, exactly like Darren and Emily did. It means committing to sell a specific amount of concentrated company stock every single quarter, totally regardless of the current price, just to safely diversify, which, if you remember, was Cal's strategy. Or as another Ebitol case study showed, it means consolidating scattered cash accounts to ensure banks aren't just skimming your interest with hidden fees, and, of course, reviewing those interest rates regularly.
Finally, your next financial step.
Let's look at that 4-step framework one last time. Assess your needs honestly. Agree on a tailored strategy. Make actionable decisions. And commit to ongoing implementation and review. Honestly, whether you're dealing with credit card debt at 24% interest or you're trying to manage a multi-million euro estate, the core steps of this financial framework remain exactly the same. It scales with you. So, as we wrap up, I want to leave you with a bit of a provocative question. What action will you take today to improve your financial situation? Really look at this framework. What's holding you back from applying it right now? Identify that barrier, take that very first step, and start taking control of your financial future today. Thank you so much for joining me for this explainer, and I'll see you next time.